Have you seen the bankruptcy surging and the amount of people living paycheck to paycheck skyrocketing? Well, I'm going to tell you why 2024 is going to get messy. You came here for the truth, so let me unveil that for you. If you can believe it or not, the top dog at the Bank of Canada, the Central Bank of Canada, even he is warning about what's going on in 2024. So I'm going to get into that today. I'm going to show you how many people are living paycheck to paycheck. I'm going to show you how it gets even worse than that. And of course, what people are doing about it to cope. Let's get into it right away. First thing, California home sales crashed to the lowest level in 15 years. We know this city by city by city. Many places, the sales are down. Nobody wants to move. Nobody wants to buy. Nobody wants to do anything. They're just kind of sitting on their hands. What does that do? Well, the realtors, the real estate agents are not doing so well. The mortgage brokers not doing so well. Anybody in the construction field for these circumstances may be out of work or may have less work right now. So it seems like it's having a snowball effect. Now, what are they waiting for? Let's be honest. They're waiting for those rate cuts. Well, let's look at this. First part of 2024, quote, is not going to feel good. That, Tiff Macklem, is the head of the Central Bank of Canada, and that's what he had to say, because we're still not in that point at which rates will be cut. Okay, they're making it very clear, at least up until this point, we're at the end of the year, moving into the first quarter. At earliest, March is the first rate cut, but still, that would still make rates quite high. Mortgage rates could come down in between now and then, but they're still high from what people can afford. The debt is simply too much. People cannot bear this burden, and they are going to be in big trouble. That's what's happening here. Too much debt. The interest on that debt is too high, and even at a reasonable pace of cuts, it's going to break some people's backs. So let's look at that. How are people dealing with it already? Well, how the housing market slowdown is rippling through the economy in 5 charts. You'll see following the Fed increases, spending and job growth in housing tied sectors are struggling. So that's really the claim that I'm trying to make here. But understand something. If there is a recession, well, many people would say that, okay, there's going to be this huge deflation. There's going to be this big thing that's happening. My whole thesis, the way that I have outlined everything actually accelerates if there's a recession. So I'll get into that. Okay. Retail sales at furniture and home improvement stores change from a year earlier. You can see how that has declined very clearly because people aren't moving, right? When they're moving, when they're willing to upgrade, when things are cheap, when the money's cheap, they're buying that stuff. And remember, this was the stuff people could not get for a year, 2 years. I know somebody that was waiting over 1 year to get their appliances. They renovated their place. They could not get the appliances. They were that backlogged. I know people that were trying to get couches. They go to get the couch. All right, I want to do a little bit of, fixing up around the house and we need a new couch. Oh, can't get it. I mean, this is real. That was happening. And now suddenly, we have too much. So what happens? Well, all the way down the line, you can see that this is having an impact on businesses. And it shows us if they're not willing to buy, there's one reason or another. Where's the money going? Well, right now we can see money's been going into bonds, money's been going into stocks, and somewhat even into Bitcoin. Look at this. Employment in select industries changed from a year earlier. That's right, because we don't need you anymore if people are not buying that stuff. At the same time, employment in select industries, you could look at it, services to buildings and dwellings and real estate, that is down from that peak. Of course, there was a huge surge. Suddenly, we went from everybody staying home, lockdown, nobody's doing anything. It flips 180 degrees. Everybody, your brother and your barber, are suddenly your real estate agent. Well, that happens, right? Bankruptcies soar as high rates and the end of 2020 aid hit businesses hard. Zombie companies lose their lifelines as increased borrowing costs compound withdrawal of the support that was there. We know this. It had to come to an end at some point. The moratoriums, you don't need to pay your student loans. All of that stuff came to an end. There are some other programs. Of course, there's always going to be some sort of social assistance out there. But right now, this is happening. It's becoming very difficult for a lot of people. And so what do we need to watch for? Well, of course, the rate cuts are coming. Okay, but if there's a recession, this is the whole thing. When I keep talking about rate cuts, no, it's not going to happen. It's not going to happen. I was saying that they were going to increase rates. All of the YouTubers, the vast majority of them were saying, no, not going to happen. They're not going to do that because there's too much debt. It's going to collapse everything. They know. I said, yes, they're going to. Even people like Peter Schiff were saying, no, it's not going to happen. Look, I read, I think 4 Peter Schiff books. Anyway, the point is, I said that was going to happen. We knew it was going to happen here on this channel. Now the opposite. Yes, they will cut rates. And guess what? If there's a recession, people say, well, there's going to be a recession, this and that. If there's a recession, it only accelerates that. And that's a big concern, a very big concern, because we know inflation will go wild. But guess what? You think they're going to admit it? You really think so? You think they're going to admit there's a recession? Maybe. Oh, but they'll say it's mild. Yeah. Be careful. Be careful. Be careful. Okay? Let's be honest. Credit card use, this report is basically talking about what people are doing, and lo and behold, they're doing their whole paycheck to paycheck lifestyle more than ever before. 62% of the portion of consumers who live paycheck to paycheck as of November 2023. I've shown you that 1,000 different surveys. 62%, 60%, 65%, 75%, whatever. The vast majority of people live paycheck to paycheck. We know that to be true. And so what does that tell us? Well, of course, their lifestyle, maybe they're spending too much. I've seen that before. But something really changed in 2020 because I was seeing a lot of people that were seemingly doing well throughout all the way leading up to 2020. And then things happened. They were still employed, but suddenly they couldn't afford everything. And I'm noticing that all over the place now. I'm hearing it from so many people. Oh, that's so expensive. That's expensive. Just going to the supermarket. I hear this all the time from people. Going to the supermarket and I have 2 bags of groceries. And typically, that was, let's say $20. That was $50, whatever the case is. And now they're saying, oh, it's twice as much as it was before. But they're telling us that the inflation is 3% though. Is that maybe not true? So the statistics that they're providing us obviously are false. There are false indications of what's happening. And so don't expect that they're going to just notify everybody and, things are going to change. We can't do that. We have to understand the fake stats so that we know what they're up to and we know what they're looking at. And of course, the real stats so that we can prepare for ourselves and our families. This is the important stuff. That's why you're on this channel, because I show you both sides. Both sides are important for their own reasons. Look at this. Only 60% of student loan borrowers made payments when bills restarted. So that just happened, right? And guess what? A lot of them didn't pay. Same data looking at the other way. 40% of student loan borrowers missed their payments in October. Well, that's an issue, right? I think for some of them, I would have to guess, this is just my opinion, that the belief is, hey, they wiped out a whole bunch of that debt. Why should I pay this? Why should I pay this if, maybe they're going to wipe out my debt? It's a waste of money, right? And so maybe that's the thought, the thinking, like if enough people don't pay, maybe they'll go in and they'll help people out. I'm not sure about that. But what I can tell you is that you stop the payments for so long and now people have been accustomed to basically, hey, I don't have to pay. I think more debt will be wiped out. And what I see is the taxpayer simply footing the bill for one thing or the other. I mean, it's just going to increase. Taxes will increase on the middle class. There's no question about that. And so we see it coming up. And this is like the very last thing. And that is the buy now, pay later. Well, now Affirm expands to self-checkout at Walmart stores. 4,500 Walmart stores in the United States. You go up, imagine this, you go up to the self-checkout, all right? No humans needed, okay, self-checkout. You go up to the self-checkout, you're going to buy your, bananas. Oh, buy now, pay later. Whoa, I can have my bananas and eat it too? I mean, I can have my cake and eat it too? You don't have to pay. I mean, it's crazy. This isn't a house where it's reasonable to go in, you put 20% down, you make a good, nice lump sum payment, and you say, hey, I'm going to work real hard. We got two sources of income here. We're doing great. We're keeping it way under the budget. We're going good. That's a reasonable use of debt. All right. This isn't. Buy now, pay later to go and buy, who knows what, your new flat screen TV. Not good. Very bad, terrible sign. And you know that people have that option there. They're going to say, yeah, I'll add that to my cart because I know I can just pay later. This is not a good sign, and it's happening each and every day. Each and every day this expands. So be very careful. Cheerios maker General Mills cuts sales view as price hikes hammer the demand. You can't even buy Cheerios now. They're getting shrinkflated. They're getting more expensive. So you lost a lot of those Cheerios in your bowl. And my goodness, have we seen the impact that this is having on the consumer? But look what they're buying. Interesting. Some people anyway. We sold over $100 million of gold during the quarter. So Costco are selling off the gold bars. Physical gold is always seemingly in high demand. Are you noticing that? Are you noticing something? Maybe they don't trust certain things and they want to buy something real. What does that tell you? Well, you know the way that this is going. And each and every week on the Friday live session, I break all this stuff down. On the Sunday session, I teach people how to build a business. Specifically, I focus on e-commerce, online businesses, but now because of myself and what I'm doing, expanding into retail coming up, that I'm going beyond that. So it will be there, but certainly that's kind of the focus of online businesses, e-commerce. If you're interested in either one of those, there's a link in the description below. Click that, read through it. And if you're interested, click the apply button. That brings you to me. You'll email me and say, hey, I want to join this. I want to see what it's all about. No contracts, none of that. Get in there. I hope to see you. And of course, before you leave, hit that thumbs up button. When you do, you're not only supporting the channel, but you're letting the algorithm know, hey, everybody, check this out. I do appreciate that. Thank you very much. And of course, as always, I'll see you tomorrow. Take care.